yields need to come down, the Y is important, but in the longer term we need economic growth to perform as well and for earnings to re-accelerate. Does that come with higher interest rates, with higher yields, with higher term premium?
Well, this is the game. I mean, 450 is, we're right at it right now as we speak, which is kind of interesting. I mean, that's the kind of line in the sand where, if rates go higher, even if growth is better, that's going to restrain multiples. So what we really need is that sort of that sweet spot between 4.5, where growth is not falling off a cliff. The Fed is doing their thing. It's, I think people are talking about, the Fed's not cutting. Well, they cut 100 basis points and back-end rates went up. So I'm not so sure that pausing is really all that bad for stocks in the short term. And now, of course, we're in earnings season, right? So it's all about idiosyncratic behavior in the short term.
Well, you say earnings. They need to show. They need to deliver. What does that mean at a time where storytelling is so important? And it's not just the actual numbers. It's what you say about them, your tone, how many exclamation points you use.
Well, it's show me time, right? So there has been a lot of storytelling going on, and I think we're seeing a separation of the winners and losers, even last night, right? And that's good. I mean, that creates opportunity for stock picking. And like one theme we've had is sort of the adopters versus the enablers within AI, and very simplistically, don't want to oversimplify it, but that's basically software over semiconductors, and that's been working not just since Monday. That's been working for 3 to 6 months. So as usual, the market's gotten ahead of it. There's going to be themes, I think, new themes that pop up this year, and that's really our job.
Has that pivot happened? Can you say that essentially the tipping point, at least in the market zeitgeist, was on Monday, where really the adopters are now going to absolutely rip, while the NVIDIAs and the Microsofts, the enablers, are going to take a leg behind?
Well, like I said, it's already happened. So the question is does it persist? What we're really excited about is not even that trade, but like, when does the technology get diffused into the broader economy? That's the true broadening out story, where you can get small mid-cap companies performing. We're not there yet, okay, because we don't have the solutions, right? That's what the application layer is, where the solutions are going to be built on the compute platforms. So that could take a year or two, you know what I'm saying? Now, markets will get ahead of that, but in our view, that's really a second half story or a 26, 27 story. So that's why our view on the index has been, we're probably going to be choppy here for the next 3 to 6 months. A lot of announcements coming out. Fed's on pause, still about uncertainty around, the implication of these policies, both globally and domestically. So we'll take a break here.
This is curious to me. Tesla actually warned about the potential for tariffs and the potential for that to hamper some of their revenues. Didn't seem to dent their stock at all.
Yeah.
GM talked about it. That was it. I mean, they basically delivered. They had the forecast, but their shares tanked. What did you learn from that? Well,
it confirmed what we already knew, which is the retail community is very active right now, very active. And we see it in our data, and they just love these stocks. Tesla, you can name a bunch of stocks that they just buy every day. Not because they're dumb or they don't know what they're doing. It's just they're buying into these themes, and then of course that creates demand from institutional investors too. So I don't think it teaches anything new last night. That's a continuation of something that's been going on for 6 months.
But these are themes you would say don't fight, because the tailwinds behind them, at least the buying behind them, is that powerful.
It's very consistent. I mean, you come in every day and the same names are kind of swooped up, and I don't see that changing unless there's a real kind of event. So if rates were to go to 5%, I think that would change, okay? If we were to get, some sort of an indication that, oh my goodness, unemployment's going up again and the recession risks come back onto the table, or there's an international event, a geopolitical event, something like that. But in the absence of something, a real gross shock, I don't see the demand for those types of stocks waning in the short term.
What if a Chinese AI lab comes out and says we can do something that you've spent billions on for $5 million?
Right. So what happened is some stocks got punished, and then the money moved back into the kind of fan favorites. And look, this is the theme for 2025. I think this is a good thing. We're going to see this capital concentration, right? That money can now go to other places, right? So financials have done extremely well. That's a new area where there seems to be a perpetual bid. Software is a new area. Consumer services have done extremely well. And then even areas like media and entertainment. Those have been our 4 sectors that have shown the relative earnings revision breadth. There's some thematics in there as well, and we think that probably continues.
Just to broaden out, and I understand it's a stock picker's market, but do you think that you've seen enough to say that the equal weight will significantly outperform the market cap weight S&P 500 this year?
Not yet, and I want to caveat this, because typically when you go from a period of market cap weighted outperformance, you usually get the relative outperformance in a down tape. right? So if you get the S&P market cap weighted to go down, then you can see that spreading of wealth, if you will, to other areas. And I don't want to compare this to 2000 completely, but that's the most similar period. In 2000, we had a lot of these tech stocks came off, and the S&P equal weight was basically flat. A lot of indices were, a lot of sub indices were actually up. So that's what we're looking for. I think in the first half of this year is the best chance that I can say that could happen, since 2022. I like to bring this up to people. 2022, right? Everybody, thinks it was a terrible year for the market. A lot of stocks were up in 2022. That was the best breadth that we had. So it's a similar setup where I don't think the market's going down 25%, but the point is, if the index can give it up, then that capital can allocate to other areas.